Joining me right now is Independent Advisor Alliance Chief Investment Officer Chris Zaccarelli. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and pollster and the president of Neslansky and Partners. Lee Carter is the author of Persuasion. Great to see everybody this morning. Thank you so much for being here. Chris, thanks for joining the conversation. Let's start with this macro story as we await the CPI later in the week. We also had a pretty good rally over the last week or so. Would you buy this market here? How do you feel about the year in terms of the macro story?
Yeah, it's been a really difficult year for the stock market, obviously down almost 20% as recently as a month ago, and it's rallied back quite a bit so far. We think we're really in a trading range. We think the market could go down as low as 20% again, hit those lows that we hit earlier in the year because of recession fears. But ultimately, we think we're not going to have a recession this year. So if that's the case, markets can keep going higher from here. We think we're in some kind of a range. Let's call it somewhere between 3,800 to 4,600 on the S&P, somewhere between single digits down to 20% down. So we think that's the range. Right now, we're really dollar cost averaging. We're putting new money to work only when the market goes down. But other than that, we're not really chasing this rally. We do think there's a lot of headwinds ahead. Inflation, as you mentioned, just at the beginning of this segment, is the biggest problem of all. The Federal Reserve is raising interest rates. There's a lot of headwinds for this market, so we wouldn't necessarily buy with both hands here.
Yeah, a lot of headwinds for the market. A lot of news this morning. You've got Janet Yellen on the Hill. You've got a market that is focused on economic data, a contraction first quarter, inflation at 40-year highs. And then the Securities and Exchange Commission Chairman Gary Gensler is going to be announcing new ideas to reshape the stock market. He says he wants to make it more efficient for small investors and public companies. It is going to mean changes in the way wholesale brokers report trades. Chris, your reaction, how would this affect us?
I mean, I think it's a really interesting proposal. I mean, personally, I think the stock market has been working pretty well in terms of price discovery, in terms of creating wealth for investors. Really, I think the problem is much more around the macro economy. Really, it's inflation, it's interest rates, it's the idea that we've just had too much deficit spending, we've had too much money into the economy. As you pointed out, there's 8.3% year-over-year inflation. That's something that really needs to be addressed. Regulation could have impacts on the margins, but I ultimately think the retail investor is going to get swept along with whatever happens with institutions. So I don't know that those, I'd have to see the policy to be certain, but right now my initial feeling would be that's not going to be as big of a boon for investors as getting inflation under control, getting interest rates back down to a normal environment after the Fed raises them. So I think we're going to be in volatile times for at least the next year or two. It's not going to be a quick fix, and something like changing regulations may not necessarily be something that will help retail investors nearly as much as the economy getting better, inflation getting under control, and interest rates getting back to a more normal policy after the Fed is done raising interest rates as high as they're going to raise them.
Well, I think you make a really important point. We already have the deepest and most liquid markets in the world. What are we doing here? The bigger issue is the macro story that is costing American families their entire paycheck every 2 weeks. Treasury Secretary Janet Yellen is going to be asked about that today. She's testifying before the Senate today, House tomorrow, to discuss Biden's 2023 fiscal budget, Chris. But one of the key questions she's going to be asked is how did she miss inflation like this? And why are we shutting down energy production, sending gasoline prices to all-time highs? Are you expecting anything new from the Treasury Secretary this morning?
Well, on the one hand, she did admit that she got it wrong, and so I think that's a positive. But in general, to your point, I don't know that they've explained why they got it wrong. I think they continue to blame things on short-term, temporary issues like supply chain issues, like things that are happening post-COVID recovery. But ultimately, energy is a huge part of the story. With oil well above $100 a barrel, gasoline prices approaching $5 at the pump, clearly, energy is one of the most important inputs to all of American business. If you can get energy costs down, that can help the inflation problem in a way that almost nothing else can help. And so, absolutely, if you have more energy independence in the U.S., you have more production, at least in the short run, that's going to make a big difference for the consumer. And clearly, politically, that's not as viable for the Democrats as it is for the Republicans. But for the American consumer, they're going to need to see more production. They're going to need to see lower energy prices. Without lower energy prices, I don't really see how we get out of this inflation problem unless we cause a recession. And those are two pretty bad choices, causing a recession or continuing to see inflation go way too high for the average person.
All right, Chris, great analysis there. Good to talk with you this morning. Thank you, sir. Chris Zaccarelli joining